gotten great value from the B2B SaaS focused content library, from my circle group, a small number of peers that meet every month, and from the workshops that Alex organizes with top people. If Alex was running acting workshops, he would have a how to cry in movies workshop and bring along his best pal, Tom Hanks. I mean, it really is quality people that he organizes.
Welcome to the SaaS Revolution show. Michael Cardamone, who is CEO of Forum Ventures. Welcome, Michael.
Thank you. Thanks for having me.
Great to have you on the podcast. We were just before we were recording talking about how I think we first connected probably like 2018. I was in New York, and I think you live upstate New York, Connecticut, right? We were trying to sync for coffee. We couldn't make it that time, but now we're speaking on the podcast for the first time virtually, which is good.
Yeah.
So you're still based upstate New York?
Yeah, in Connecticut. So yeah, I spent 9 years in San Francisco, but I'm from upstate New York. My wife's from Connecticut. When the kids started coming, we decided to move out to the burbs and ended up in Fairfield County, which is right outside of New York. So I'm in the city right now, but yeah, live out in Connecticut.
Am I right? Did I see that you just had another one recently?
I did. We just had our fourth, which is our house. We have a 6'4", 2 and newborn in our house, so it's a bit of a whirlwind right now.
Yeah,
drinking a lot of coffee these days.
Yeah. I can believe it. I've got two girls, a 5-year-old and a 6-year-old, and kind of often, we thought, do we go for number 3 or not? And most of the time we're leaning on the not side, but every now and then there's like, shall we? Yeah, when I hear about people like yourself, 4 children, and there's many people I know with 5, it's like pretty impressive. But maybe it gets easier the more you have. I don't know.
I don't know. I think 2 to 3 didn't feel like a huge incremental jump. 3 to 4 has felt like a lot, to be honest.
Yeah. Okay.
So,
well, good stuff. Well, hopefully the coffee is good, and you are getting some sleep, and also your wife as well. But congrats. So tell us a little bit. We've learned a little bit about where you're from, that you've got 4 kids. But what more can we learn about you? I guess kind of as a person. Who is Michael Cardamone?
Yeah. So yeah, grew up in upstate New York. My grandfather and my dad were entrepreneurs, so kind of grew up in a very entrepreneurial family. And in 2008, got fixated on the idea of moving to San Francisco and getting into tech, because I felt like that was an opportunity to get into businesses that could scale. My dad had run a small business, and I was enamored with the idea of the ability to impact a lot more people and scale a business a lot larger, and felt like tech was the place to do that. Basically just got lucky and ended up at Box when it was like 25 people, spent some time there, went to another startup in the ed tech space that we grew to like 24 million in revenue. And then in 2014, again, kind of got obsessed with the idea of getting into venture. I started interviewing with some venture funds, and it wasn't really working out. I realized it was kind of a dime a dozen to being like an early, I thought that was going to be unique going into interviews, but it was, a lot of people going into interview with venture funds worked at high growth venture backed companies. Like, it wasn't unique, and I hadn't done anything to differentiate myself. But I also am just like intensely competitive. I grew up with an identical twin, and so got it in my head that I wanted to, prove to everyone that I could just do it. And so wanted to start my own fund, knew that I, wasn't going to be able to raise a lot of money, and felt like the accelerator model was a good way, a great strategy to deploy a small amount of capital, but also a way for me to be able to do investing and be like very hands-on operationally, which I really enjoyed. So quit my job in late 2013, I think it was, to start what was then called Acceleprise. We recently rebranded to Forum Ventures, which we can get into. But yeah, that was that background. Did some consulting work to pay the bills while I was fundraising. When I got to $1 million, did a first close and kind of launched publicly just to hold myself accountable and force myself to keep going and build momentum. And ultimately was able to raise, I think we ended up with like 3.6 million for the first fund, and have been able to grow it pretty significantly since then.
Amazing. And thanks for sharing that. So it seems like by starting what was Accelerprise, then you had this opportunity to really kind of help a lot of people, a lot of founders, kind of like with their businesses, seems like you're quite mission driven. How has that been, that experience? I guess if you've been doing it for, what is that, like, I don't know, 7, 8, 9 years or something like that?
Yes. Yeah. A little over 7 years now. Yeah, it's been amazing. I mean, one of the things that I when I sat down and thought to myself, like, what do I want to do for the rest of my career? And what do I want at the end of my career to look back on and say that was a successful career? And one of the big driving motivations for me was I wanted to be able to feel like I had a big impact on a lot of people. And so the accelerator allows you to do that, if you do it well and execute well, obviously. And so from the very beginning, I've been like maniacally focused on tracking like NPS of the founders going through the program and just getting feedback and iterating and continue to improve to make sure we are actually driving significant value and having an impact. And yeah, it's something we've done a good job of. We're always looking to improve, but pretty proud of what we've done. And I think now we're investing in 60 to 75 companies a year, so can continue to increase the number of companies that we can hopefully have a meaningful impact on.
Why, you mentioned the rebrand, and I saw that, I saw the announcement. Why rebrand from Accelerprise to it's Foreign Ventures, right? Not Foreign VC.
Yeah, Foreign Ventures. So yeah, it was a number of things. So Accelerprise, when I first started this, existed in DC. They were one of the few kind of B2B SaaS focused accelerators that existed. I reached out to them to kind of learn from them because I was thinking of launching something similar in San Francisco. And they were running it part-time. They weren't going to raise a second fund. I ended up licensing the brand. One of their partners invested in the first fund, and they were acted as kind of advisors, helpful, but it was a separate business, separate GPs, separate LPs in San Francisco. But it wasn't our original brand; it was their original brand. So that was part of it. Part of it was, I felt like Accelerprise was, sometimes tricky to spell, tricky to say for people. So from that standpoint, we just wanted something that was simpler. But the biggest reason was just the shift in kind of what we were building. So Accelerprise, I felt like we built a good brand around specifically the accelerator, and we've kind of evolved the business beyond just the accelerator. So the accelerator is still a core part of what we do. We're on our 4th accelerator fund. We've worked with probably over 200 companies now that have gone to raise like, I don't know, close to 400 million in follow-on funding and counting pretty quickly. But about a year ago, we also added a seed fund as well, which allows us to kind of support and invest in companies at that, just that next stage beyond pre-seed in a more meaningful way. We've got a community of like corporates and buyers and decision makers that we're building as part of our business. We've got this huge community of founders, obviously, and mentors. And so we're now kind of shifting to be this kind of all-in-one platform to support founders, what we call from zero to sustainable, which is like what we think about as like from idea stage to, self-sustaining or Series A. And so as we thought about that evolution, we wanted something that was more encompassing of that full kind of platform vision versus just being the accelerator and known as an accelerator, which we felt like Accelerprise was very tied to.
Amazing. I love that, from zero to sustainable. And I guess kind of really that's what we want to have, like the focus of the meat of this kind of podcast and the conversation, in terms of, you work with a huge amount, of pre-seed, and seed stage companies, founders, and just trying to, I guess kind of pick some of your insights and lessons in what they should be doing, right, and what they should be aware of, and the challenges and perhaps how to overcome some of those. So happy to dive into that.
Yeah, that'd be great. So I'll look at it from the lens of assuming you're planning to fundraise. Most of the companies we work with obviously aspire to fundraise. I've been an advisor to some companies that have bootstrapped to pretty significant scale, which is obviously a different path, and you have to think about things a little bit differently. But I'll look at this I'll answer this from the lens of a pre-seed company that is aspiring to raise capital and have, kind of accelerate growth and build, a really big venture scale, quote unquote, business. So yeah, I think there's a number of things. One is, if you're looking at it from the perspective of how do you raise capital, and you're not like, let's say you're not, again, assume you're not like coming out of as an early employee of Stripe and have people throwing money at you, because in this market, like that's kind of what's happening if you have a certain set of profile. But assuming you're not that, I think you really need to focus on like, what are the things people need to believe for your business to get really big? And then what can you prove with limited resources in a short amount of time to help people get comfortable around believing those things? And so that can mean a lot of things for a lot of different companies. But it might be, if you think investors are going to be worried about like product execution risks, do you have someone on your team, or can you recruit someone or bring in a co-founder that has the technical chops or product chops that are relevant, where people will then believe they will be able to execute on building the product, depending on how challenging that will be. If it's go-to-market risk, like what proof points can you get that there's pull from the market, that customers want it, even if you haven't gotten actual traction yet? Like, can you prove that customers want this, are willing to pay for it, what they're willing to pay, why do they want it, like how much customer discovery have you done, all of those sort of things. And then I think around market dynamics, like you need to have a lot of conviction and clarity around how you think your market's going to evolve, why it's going to evolve that way, and then how you win in that evolving market. And again, the more proof points you can show, which is hard as a pre-seed company, but it might be a screenshot of an email from a customer talking about like how they don't like the incumbent technology stack they're using, or it might be maybe you won a deal and understanding like why you won that deal over a competitor, and why you can consistently continue to do that. So I think it's all about figuring out what things you need to prove in order to be able to raise capital, so that you can then bring on the resources and the team you want to do to really execute at the scale and level and pace that you want to. And so a lot of that is just figuring out how to prove those things out, so people believe that you can build a big business, which is the trickiest part of pre-seed.
We recently, and this might be the podcast that you listen to, but we had a founder on that raised the pre-seed round with just a prototype on Figma. She actually spoke last night at SaaStock Local London. It was Daria from Sales Room.
Yeah.
Is this something that you've seen kind of like more of, and so you're not necessarily having to have built the MVP already, but it's just like, here is a prototype, and here's the idea, and we're going to build this? Or is that a kind of exception and not the norm?
It certainly happens a lot. I would say it's like 50-50. I think it really depends on the founders' backgrounds and the market dynamics. If you're which I was surprised, actually, so that was the podcast I listened to. I would say sales tech is a perceived to be crowded market. I don't know a lot about what they're doing or their product. It sounded like they had a lot of good backgrounds as founders, which I think is always helpful. But then it all comes down to like, how much momentum can you build? And it sounded like she had a lot of momentum with the people she had involved, both from the fund side, but also on the customer side. So so some companies do. I think what it comes down to is like, if you're in a perceived crowded market, it's much harder to raise pre-product, pre-revenue. Unless you have an exceptional founder with like a notable background, or you have a lot of proof points in the market that you have an indication that there's a clear line of sight to revenue once the product is ready, and it's not an overly technical product, so there's not a lot of product execution risk. So really, then they're underwriting like that they'll be able to kind of execute on building that product and then get it in the hands of people which they've already kind of proven are willing to pay for it. If it's in a less crowded market, or there's like extreme kind of market tailwinds behind it, then I think it's in this market today, it's becoming easier to raise pre-product and pre-revenue for some profile of founders.
Yeah, if you're David,
it's all about building momentum, though.
Yeah, if you're David Cancel, and I think he probably did this, like leaving HubSpot, you got an idea for Drift, 15 million. Series A without really a product being built yet. But
that's the exception, though. Like that's what you hear about all the time in like TechCrunch, and it's like maddening for founders. But there aren't that many of those types of founders where it's like a very clear, like, oh, this person built X at this company and now they're going to leave and build Y, which is very similar to X. And then they have term sheets being thrown at them at ridiculous valuations these days, right out of the gate with nothing. That happens if you have that sort of background of execution. But that's tough because founders read that and they get frustrated, but it's more the exception than the rule, in my opinion.
What's or is there like a number one reason that you say no to investing at the pre-seed stage?
Yeah, it's a good question. So it's usually a couple of things. So it's usually either market dynamics where we feel like it's a crowded market with a lot of companies fighting over a similar budget, even if they're not all approaching it with the same type of solution. And we haven't seen enough indications that this will be differentiated enough or that they will be able to have enough resources to rise above the noise in that crowded market. So that's part of it. Part of it is we'll look at like, is it the right founder market fit? Like, does that founder have some unique insight or skill set or connections that will enable them to like get through that grind of like getting the early customers and kind of building credibility and recruiting people to the team and all that kind of stuff. So that's another one. And that's a broader statement around just like the founder. Like we need to jive with the founder. We need to like be inspired by them, feel like they're going to be able to recruit people, really good people around them. And so, sometimes that's just not the case. And then the other is just, do we believe there eventually could be a scalable and repeatable go-to-market strategy here? And so a lot of times we'll look at things and, maybe they're selling into like mid-market and the ACVs are really low. And we just don't see a clear line of sight to how they can grow ACVs over time, and or how they can get sales cycles down, in which case then like, if you have like a 10 to 20K ACV and you're selling into a mid-market or enterprise with long sales cycles, like that's just a really hard go-to-market motion to make work. So you might be able to get some early customers and some early traction, but we just find it hard to believe that can scale, even if you can raise a lot of capital in an efficient enough way. So that's another thing we'll kind of look out for as well, even at the pre-seed stage before they really have a go-to-market motion.
Moving on to seed stage founders, as they're then looking to raise their seed rounds, what are the things that they need to be thinking of? What are the challenges and any advice to kind of overcome those?
Yeah, I mean, it's a lot of the similar dynamics as pre-seed and seed. It's it's again like, what do you need to prove for people to believe that you can build a big company? And if you look at that, like maybe that shifts a little bit at seed, but it's very similar to pre-seed. It's, do you have customers who love the product? Are they paying enough relative to what the sales cycle was? Are the market dynamics such that like a winner can be created? And do you understand why you can win in that market and how it's evolving? And can you explain that with a lot of conviction and clarity to investors? So I think it's a lot of that. You might have, if you did raise a pre-seed round and you have some resources, they might be looking at like, were you able to recruit like one key hire to show that you can recruit really great people around you? Because that's a big thing investors will look for. So yeah, it's a lot of that kind of stuff of just, in general, like I look at fundraising as all about how do you build momentum. There's a lot of ways to build momentum. Traction is obviously a great one, and revenue growth, but there's a lot of other ways like pipeline growth, customers who rave about you, key hire, key advisors that build kind of credibility around what you're doing, PR, just buzz, like the sense of constant and relentless progress, which, a lot of founders can do. Like we have one founder who he sends a weekly update, and like every week it seems like a ton is getting done and he's making a ton of progress. He's had like 50 conversations with potential customers and pipeline is growing. Like there's that sense of this like relentless progress that can build momentum for investors and make it feel like you're really executing well. So I think from a founder's perspective, it's all about building momentum and then having the substance to prove to investors that you have the data points they'll want to see in order to believe that you can build a big company, or at least believe that you can get to that next round of funding or the next milestones you want to get to off of that raise.
I think you mentioned earlier that you've invested in like over 90 SaaS companies, right, or startups.
I think we're at like 250 companies now that we've invested in, and then I've done probably 10 or 11 angel investments, and then I also spent a year as like a venture partner with SaaStock. So yeah, I've had a lot of data points to learn from, and certainly have made a lot of mistakes along the way as well. But.
With that, I'm assuming like you don't personally get 250 investor or updates from the founders like each month that you have to kind of read and then provide any advice to, or.
So we have founders send updates to an email called updates@forumvc.com, and then that goes to our whole team, so everyone can kind of see all of the updates. Not every company sends updates. Some send it once a month, some once a quarter, some once a week. It just depends on the company. Some don't send them at all. But yeah, and then anyone on the team can jump in. We're a team of I think 11 or 12 now. So anyone on the team can kind of jump in if there's like specific asks. So it's not all, I'm not the bottleneck on everything for sure. Like we've got a big team to support companies now.
What is the preference? I mean, is it like, are you happy with weekly updates? Is that too much? Should it be at least monthly? What is the kind of recommendation to founders?
Yeah, I think weekly is helpful as you're gearing up to fundraise, because I think it's a good way to keep people informed that maybe are in the pipeline or that you're having conversations with on the fundraising side, again, to kind of build that momentum. I think it's overkill post raising a round. Like, I don't think you need to send weekly updates. I think monthly is the right cadence, although quarterly is okay. But I think getting in the habit of sending an update monthly helps the founder think about their business, what's working, what's not working, what are the key asks that you have, so you can actually leverage your investors. Because it's tough as an investor if you don't get an update for a year, and then all of a sudden you hear from a founder and they want you to help with something, and you don't even have context on like how the business is doing or what's happening in the business, or what's working, what's not working. So I think if you want to get the most out of your network and your investors, I think sending a thoughtful monthly update is the right way to go.
So, given your experience across all these investments and time in VC, what is either best piece of advice or sort of lessons learned, since you've been within the industry?
For founders?
Maybe for founders, and perhaps even then one for yourself as well.
Yeah. So for founders, this is a somewhat biased answer in that we have this big community of founders. I think you're building a big community of SaaS founders. So building a company can be really frustrating. There's going to be ups and downs. It's a long journey. It's a grind. You're going to get a lot of no's. Like, it's just mentally challenging. And I think surrounding yourself with other peers, whether it's through something formal like what you're building or what we're building, or informally just getting peers around you, I think it's like incredibly helpful and impactful for founders to have other people who are going through a similar thing at a similar stage to bounce ideas off of, to commiserate with when they get a no, to like, just think through like strategic things, get answers, share network. Like, I just think we've seen so much serendipitous things happen through our community of founders connecting with each other, that I'm just convinced it's like such a good value add for founders, especially as like, it becomes mentally challenging to kind of go through this journey as a founder. So that's one piece of advice that I would give to founders, is just find your tribe, like find your people that you can lean on and share with and everything, so that you're not going at it alone, because it can be a lonely journey as a CEO and founder. So that's one. Lessons learned for myself, I think there's just so many. There's some of the obvious ones of like, there's been times where we made investments where we really liked the market, but we weren't sure on the founder, and like, in a lot of cases those haven't worked. And so I think a lot of it is like, investing in great people, and that's frustrating term to use because it's so ambiguous, and like what great is different for everyone. But I think for us, it's like finding founders who, have, like I said before, like can speak with like clarity and conviction around what they're building, how their market's evolving, why they're going to win in that market, and like truly, like really, really understanding that. Founders who are obsessed with their business. So that doesn't mean like they're working 24/7. Like that's not mentally sustainable, but it means they're thinking about their business all the time. Like you can tell when a founder is obsessing about, they'll know off the top of their head who like the biggest potential customers in the pipeline, or they'll know, how much revenue they're getting from their biggest customers. Like they know these things off the top of the head because they're obsessing about it. Whereas founders who don't know those things, you can kind of tell like this, maybe their heart's not in it as much. And then obviously like big ambition, big vision, like want to build a big company, all those things. And ability to recruit great people. So those are all the things we look for in the founder. And I think the other thing that's tricky is, we run the accelerator and then we do follow-on investments out of our seed fund now. And so, in the past, I think we used to do some follow-on investments out of the accelerator, and I'm sure in like the very early days, I made some mistakes around, I build genuine relationships with the founders, and then was I making, especially when it was just me, was I making follow-on investment decisions based on like who I had the closest relationship with versus the underlying business. And so we've now, with a bigger team, we can obviously create a lot more kind of system and process and structure around how we make those decisions so that it's less relationship driven, or not relationship driven at all, and more around just evaluating the actual underlying investment opportunity.
What final couple of questions there? What book are you currently reading, and/or what is your favorite business book of all time?
So I have zero time to read right now. I basically work and hang with the 4 kids and try to keep up with that. So I'm not reading a book currently. Yeah, I mean, there's so many good books I've read over time. Like I think one that came up recently that I enjoyed was $1 Trillion Coach, which was Bill Campbell, who's been an executive coach for a lot of people. But yeah, I mean, even like old school ones around like how to win friends and influence people, I thought was like impactful back in the day. I think there's been a lot of I don't know. I've read a lot of business books along the way, but those are some that come top of mind.
From zero to sustainable hasn't been written yet.
No, it hasn't.
but yeah, if you find the time running the fund and looking after the kids, then maybe that could be one for the future.
Yeah, maybe someday.
Yeah. So Michael, where can people find you online and Foreign Ventures?
Yeah, I'm on Twitter at MG Cardamone. My DMs are open, so feel free to reach out. My email is just mike@forumvc.com. Our website's forumvc.com. Those are probably the best places.
Awesome. Well, thanks so much, Michael Cardamone, for being a guest on the SaaS Revolution show today. It's been a pleasure to speak with you.
Yeah, thanks for having me. I really appreciate it, Alex.